Hello everyone, welcome to Market Wealth India. Today we're diving into one of the most talked about IPOs hitting the market this August 2026, Molbio Diagnostics. You've probably seen the headlines and the hype, but as smart investors, we know we have to look way beyond the surface. In this explainer, we're going to open up the hood on Molbio, look at the actual fundamentals, the financials, and the risks, so you can figure out if you should be applying for this one or just avoiding it entirely.
Okay, let's just jump right into the number that has everybody talking. The current gray market premium, or GMP, is sitting at around 170 rupees. So if we look at the upper price band of 807 rupees a share, we're looking at a really solid estimated listing gain of about 21%. That's a great premium, assuming the market stays stable. But you know the drill. GMP is unofficial and it changes every single day. To see if that 21% is actually justified by the business itself, we've got to dig into the facts.
So, here is our quick roadmap for today. We're going to cover the IPO hype, what Molbio actually does, their financial performance, the overall market potential, where exactly the IPO money is going, and finally, my verdict on whether to apply or avoid. Let's get to it.
Starting with Section 1, the IPO hype and all the key administrative details. All right, mark your calendars. The IPO opens on August 10th and closes on August 12th, 2026. The price band is set between 768 and 807 rupees per share. Now, the total issue size is pretty massive at almost 940 crore rupees. But, and this is a big but, a huge chunk of that is an offer for sale, which means the cash goes straight to existing shareholders who are cashing out. The fresh issue, the money actually going into the company, is just 200 crores. And if you're a retail investor, you'll need to bid for a minimum lot of 18 shares, which sets your minimum investment at 14,526 rupees.
Moving on to Section 2. What exactly does Molbio do? Let's look at the business model.
First off, Molbio operates in the in vitro diagnostics space, or IVD. If you're not super familiar with the jargon, IVD basically refers to medical tests done on things like blood or tissue samples taken right from the body. It's how doctors detect diseases, infections, you name it. It is the absolute backbone of healthcare decision-making. Molbio is highly active across this space, dabbling in clinical chemistry, immunodiagnostics, and point-of-care testing.
But without a doubt, their absolute crown jewel is a platform called TrueNat. Guys, this thing is a real game changer. It is literally the only Indian rapid molecular test endorsed by the World Health Organization specifically for diagnosing tuberculosis and detecting drug resistance. Why does this matter to us as investors? Because the barrier to entry here is unbelievably high. Molbio spent 13 long years in R&D to get these ICMR and WHO endorsements. It's an oligopolistic market, meaning they have hardly any competitors globally who can pull this off, right at the point of care.
Now, let's see how that massive R&D translates into numbers in Section 3, tracking their financial performance.
I really want you to look closely at this growth trajectory, because it's super impressive. Back in FY24, revenue was a solid 840 crore rupees. Jump ahead just 2 years to FY26, and that top line has absolutely exploded to over 1,455 crores. That is huge. And their profit after tax practically doubled, going from 83 crores up to 164 crores. They are clearly scaling fast. But, and we have to be objective here, the balance sheet isn't totally flawless. They're carrying borrowings of over 242 crores, plus contingent liabilities of around 61 crores. On top of that, their return on capital employed has actually dipped recently, which kind of hints that their capital efficiency is getting a bit weaker as they grow.
And there's a super crucial detail about where all that revenue is actually coming from. A staggering 70.2% of their FY26 revenue came strictly from selling test kits, mostly for TB. So on one hand, this is a brilliant cash cow, right? Hospitals buy the TrueNat machine once, but they have to keep buying the consumable test kits from Molbio forever. On the other hand, it's a massive concentration risk. If TB rates drop, or if a cheaper test floods the market, Molbio's main revenue engine could take a really big hit.
So, where is the industry heading? Let's check out Section 4, Market Growth and Potential. The macro tailwinds here are actually really strong. The Indian IVD market is set for some serious expansion. Molecular diagnostics, which is exactly where Molbio dominates, is projected to grow at a compound annual growth rate of 12.7% from FY26 all the way to FY31. Right now, testing in India is highly illness-based, meaning you only get tested when you're already sick. But as our healthcare system matures and people start focusing more on proactive wellness, the sheer volume of testing is going to skyrocket, which positions Molbio beautifully for the long term. All right, Section 5. Objects of the issue. Why exactly are they raising this money? Remember that 200 crore fresh issue we talked about earlier? Here is the exact game plan for that cash. A big chunk is funding a new R&D facility and a center of excellence for their subsidiary, Big Tech. This is super important because they desperately need to develop tests for diseases beyond just TB to diversify their revenue. They're also pouring money into capital expenditure for their manufacturing plants in Goa and Vishakhapatnam. But keep in mind, a good portion is also earmarked for general corporate purposes, which basically means dealing with their large working capital needs and paying down some of that debt we just talked about.
Which brings us to the most important part of the explainer, Section 6, the final verdict. Should you apply or avoid?
Let's just weigh the facts objectively here. On the positive side, you've got a fantastic 21% estimated listing gain, a highly defensible WHO-endorsed product, and just undeniable revenue growth. It's a great story. But looking at the risks, that 70% reliance on TB test kits is a major vulnerability. Add in the high debt, the massive working capital requirements, and a declining capital efficiency, and you definitely have reasons to be cautious. Plus, staying ahead in this space means burning a lot of cash on constant R&D to fight off global competitors.
So, overall, this IPO really looks suitable for investors who have a stomach for moderate risk and a long-term investment horizon. The core business is incredibly strong, but you absolutely have to monitor that product's concentration risk and the debt levels. If you're just here for a quick listing gain flip, keep your eyes glued to the final subscription numbers and the daily GMP right up until the closing date. So I have to ask you, based on these fundamentals, are you going to apply or are you sitting this one out? Let me know your strategy down in the comments. If you found this review helpful, please hit that like button, share it with your investor friends, and subscribe to Market Wealth India. We are here every day to help you build your wealth. Thanks so much for watching.